What's up, ladies and gents? It's your boy Vusi Max from Supreme Traders coming at you live with another one from Supreme HQ. Right. So today's video is directed at a Supreme Traders question. He asked me, how do you tell confirmation? Right. So he's asking about the entry. So today's video is going to be answering that, and I'm going to go in depth, and we're only going to use one pair, which is the AUDCAD. And if you can see here, we already have a trade which is open, and I'm going to explain that, but first we need to have an outlook on the market as usual, right? So if you're new here, smash the like button and subscribe if you haven't. If you find the video helpful, be sure to leave a comment, like, and share it to one of the traders, or if you know anybody who might need the help, right? But thanks for tuning in, and let's get right into it. So for this pair, guys, the trend is on the daily chart. So the best way of drawing it becomes using the second high and the third high, right? This is the downtrend that we drew. As you can see, it's joining from this high, and then we have a low there, a lower high, and a lower low, and the price is now in between here, which is confirming our trend, right? So we know that we must wait for a reversal, and a reversal on this trend is when the price goes up, right? But because it's a daily chart, the reversal can take days and weeks and stuff like that. So if possible, we need to find a price action that we can trade in the smaller time frame, which is why I want us to go to the H4 time frame. I want to show you what's going on in the H4, right? So in the H4, guys, we can see that the price isn't very far from the trend line, right? And we kind of found the best possible entry we could have actually aim for within this price action. And I want to show you how exactly we got to this into this trade, right? So you can see we have a low there, a higher low, and a higher low again. So basically what we did is we found correlation here within the first low and a higher low and a higher low. So we draw another trend line here to actually isolate the price that's going on between the main trend line, which is marked by the yellow trend line, and then I'm gonna draw the smaller time frame trend line in like a white trend line. I'm gonna use white to highlight it, so it's gonna look like this. So guys, this is what the trend line I was telling you about just now, it looks like. Basically, I just joined the first high, the first low, and a higher low and a higher low. So it was easy to predict the price when it got here, that the price was actually going to go up and approach the main trend line, right? So that's why we opened a buy within a downtrend, because in the H4 time frame, it is basically an uptrend, and we can basically buy because you know that in the daily time frame, price has to either bounce or retest or actually break out on the main trend line, which we have up there. So we have to buy, right? So the question now becomes, actually, how did we buy? How did I know when was the time to buy? So with this trade, you can basically see with a higher low when it forms that now it's time to buy. But there's another method of drawing a reversal line, which I'm going to show you just now. All right, so the reversal is actually, if we're drawing this uptrend trend line here, it means that when it's going up, it's the trend. When it's going up here, it was also the trend. And when it's going now, we're going with the trend. But when it goes down, when the price goes down, and when it goes down also here, that is a reversal. So to draw the first reversal here, it's gonna look like this. And basically, to get this, we basically draw from the highest that the price reached, peaked, and then we join the trend line basically with the candlesticks that are going down with the price action, because it's not this pair wasn't going down. The price wasn't going down for one candlestick or three candlesticks. It was more than that. It was like for some time. So we have to isolate all of those candlesticks with the reversal trend line. So we know the first candlestick here that crosses and closes, that's going to be our signal to buy, right? So what do I mean by the term closes? So guys, if you can see, this is where the candlestick actually broke or crossed the reversal trend line, which is marked in white. And this candlestick is a 4-hour candlestick, right? So meaning when this candlestick which crossed was still in cycle, it wasn't the right time to open the trade only until the starting of this long candlestick we started here. So before we know if this candlestick did cross or if it's gonna reject and close below the reversal line, making our trade invalid, that's why we have to wait for that candlestick to complete its cycle before you actually open another trade. So when you're waiting for a candlestick to complete its cycle, be it the 5 minute chart or 15 minutes chart, if it's a 5-minute chart, you're gonna wait for the 5-minute cycle to complete, and on the next one, that's when you're gonna open a trade, provided that the candlestick that you're looking at has closed outside or on the other side of the reversal candlestick, right? So guys, this is what the current reversal look like, right? So basically it's the same principle that we used to get this reversal that we used here. Basically, like, this was the reversal here. We draw the reversal line and aligned it to the reversal candlestick, so we know that when the candlestick that crosses the reversal closes outside of that reversal line, that's our signal to basically go in. Zoom in for a bit, then you can see that the trade was opened exactly on the second candlestick. So this first green candlestick which is sticking out, that wasn't where we opened the trade, but it was actually where we opened the trade, when it was the candlestick that we waited for to close, and then we could open the trade, right? And the SL, obviously, is the recent low, which is where the price had turned, and it's also in confluence with the trend line. So that tells us that it's a very valid zone to actually use as a stop loss. And one thing I haven't explained with you guys is the TP. So the TP for this trade, I didn't use the trend line as you might think. I actually used a very strong resistance zone. So if you've been following my videos, you know that I'm a firm believer of using the recent highs when we're buying. So this was the recent high, but if you pay attention to something, then you'll realize why it's such a strong level to use as a TP. So guys, as you can see now, this is how the resistance zone looks like. It's in basically the price made contact with this zone 1, 2, 3, 4 times. So it's definitely not an area we can ignore. And that's it for today's video, guys. I just wanted to give you guys a quick recap of this question, and I feel like it might be helpful for a lot of you guys out here who don't pay attention to the minor details, which actually make a whole lot of difference in the long run, right? So if you've been watching my previous videos, you know I've been using a different charting system, and this is the TradingView platform. So I'm gonna leave a link in the description to that if you want to go get it or something like that. And also let me know if you prefer this charting view compared to the one I was doing before, right? And thank you guys for watching. Also, I'm gonna be doing something I've never done before. I'm starting a free group, a free Supreme Traders group. So you guys should just go follow me at VusiMax. underscore, and also I'm gonna leave my WhatsApp number in the description box below. Send a message to my WhatsApp and I'm gonna add you into that group, and I'm just gonna give you guys updates and setups now and then, and updates. And every time I post a video out here, you guys will definitely know, and it's gonna have all kinds of stuff that I think will be helpful to you guys. So thank you guys for watching. Like, subscribe. I'm gonna see you guys on the next one. All right, peace out.